Good evening. I hope you're doing well. Let us continue with our assessment of a particular sector uh, using price action. In the previous videos, we have assessed Nifty as the broader sector, and then for practice, we moved into the Nifty auto sector. And in the Nifty auto sector, we assessed that this is on the monthly time frame a clearly uptrending stock index because we can see an all-time high. And we also assess that there is a pullback on the index, after which the question is, will it go ahead and create a new all-time high? In order to take the trade, or in order to plan a trade, we obviously form the assessment on the longer time frame, but we shift to the shorter time frames. And in the shorter time frame, we basically observe the role that this particular support zone is playing, which I will just mark with this line here. So we can see the role that this particular resistance, this zone is playing as a resistance on price action, because this was a resistance for a full year, and a clear gap up breakout from this particular range, giving it targets of the entire length of the range, which is approximately 4,500 points. All of this was covered in the video yesterday, and I just thought that once we have assessed that a particular sector is bullish, it obviously translates into us wanting to buy into that sector. And the question is, how are we going to do that? And the answer is by buying into stocks listed under that particular sector. So let us just come back to this particular chart, and I think somewhere here I have on the NSE India website just selected the Nifty Auto Index to list out the 12 components, I think, in the auto index. And I'm going to use the assessment that we made earlier in order to plan long trades into the components of this particular index. Now, when we are planning long trades, the first thing that we want to know is obviously if the sector is bullish or not, which we have assessed. The next thing is, do we want to buy stocks which are stronger than the sector, or do we want to buy into stocks which are weaker than the sector? This is a structural question that needs to be answered by the trader. If you are planning to buy stocks which are stronger than the sector, in general, you are trading the momentum. And if you are trying to buy stocks which are weaker than the sector, you are going to be trading the value. These two trades, all trades are similar in the sense that they all have an entry price, a stop loss price, a quantity decided, targets, etc. In that context, the framework of all trades are similar. But the experience of being a part of a momentum trade and a value trade are significantly different. If you are trading a momentum, then your USP or your core strength in the market should be your discipline. That is, if your stop loss or target hits, you have to exit that position. Further, if your entry is traded, regardless of what is happening outside in the market, you will still trade that position. Further, you will not deviate from any kind of rules in terms of quantity, because that is the nature of momentum trade. But if you're trading on value, then your patience is your true USP, and in order to be able to be patient relatively easily, you will need to trade with fewer quantity. Because when a stock gets into the value zone, it remains in a range for longer durations, and it takes time till before it breaks out from a range. Whereas stocks in the momentum zone get into ranges which are of shorter duration, and whether it's a breakout or a breakdown, it happens relatively quickly. So the question is, what is momentum and what is value is obviously all relative, and the question is relative to what, and my answer is to the index. So how do we make that filter? What I will do is known as curve fitting. I obviously know that this index is trending, and I will select a moving average which the previous low failed to test. In other words, I have selected the 30 period moving average here, and you will see that the previous low, that is at approximately 19,350, it failed to test this. In other words, this index is trending, and it is trending at a rate greater than 30 period moving average. This is the information that I have. Logically, if there is any stock which had a low less than or equal to the 30 period moving average, that stock was trading weaker than the index, and I will use that information to eliminate that stock based on its current price. So for example, the first stock is Ashok Leyland. So we have a look at the index here and we look at Ashok Leyland, and what we will see is that even in Ashok Leyland, it obviously defended the 30 period low, but I'll just show you the index here. But we can see that the index is trading significantly below its previous high. And so this is its all-time high. The index is trading significantly below its previous high. We are of course bullish, but when it comes to Ashok Leyland, we see that the index is trading at or equal to its all-time high. So obviously Ashok Leyland becomes stronger than the index. And as a value trader, as a momentum trader, I am going to filter out Ashok Leyland. I'll just give, to understand this point better, I'll give another example. Let's say, for example, I select Tata Motors. Now, here in the case of Tata Motors, you will see that the price failed to, it clearly breached the 30 period moving average. So, Tata Motors also is trading at an all-time high, and this is its first pullback. But we can see that this pullback is weaker than the index pullback. In other words, Tata Motors has been a laggard. Now, if we zoom in closely on Tata Motors, we will see that on the monthly there is a hammer coupled with a bullish harami. So this is obviously suggesting that 530 is a very strong support for Tata Motors. And we will see that the high of 750 has been in play for almost the whole of 2025, like for 8 months. So we know that 750 approximately and 550 on the downside are its trading range, and currently it is at 680, so it doesn't really invite any trading activity from us as such. But as momentum traders, the point is that we would simply reject Tata Motors as a stock in our portfolio, because our objective is to create a portfolio in which firstly we have selected stocks from a bullish sector and we want that stock to be leading the sector. That is the definition of momentum. Whereas what value is doing is it is selecting the winning sector, but its argument is that they are buying much cheaper into a stock into a winning sector. That is their argument, and which is fine. But my point is that when we are trading, we don't get more than 3 months expiry. And the problem is that when you pick up value, they can be in that zone for several months, maybe a full year, maybe 3 years, and we will get tired of repeatedly buying into that, and even then we will only note that it would have not created a new low, and the trend would remain unchanged, but it's simply not breaking out. So if we see Tata Motors and if we see Ashok Leyland, we see a clear difference in where the price is. And logically, our role is obviously going to be that we are going to buy the dip only. But the dip of which stock and from which sector, that work is something that we have just done in the previous video. So we will buy a dip of a momentum stock, which is Ashok Leyland, and obviously from the auto sector. To tell you how quickly this process can be done, let's just look at the next stock, Bajaj Auto. And here you will see Bajaj Auto has also defended, but it is significantly weaker than Ashok Leyland, but it meets our criteria of what we will define as a momentum. Now, the reason is because Bajaj Auto is almost mimicking the index, but it is weaker than the index, but not significantly weaker than the index. So this is the role of the moving average that we have placed. The moving average is basically going to say either on or off. If it touches the moving average, we reject the stock. That is, we no longer pursue buying its dips. But if it is trading above the moving average, we will keep looking at that stock and have an order. But even though Bajaj Auto does qualify, we already know that our rank 1 at the moment is Ashok Leyland and rank 2 is Bajaj Auto, whereas Tata Motors simply doesn't qualify. Let us just continue further. We have Balkrishna Industries. So Balkrishna Industries is obviously rejected because we can see that it has tested the 30 period moving average, which was our cutoff several months prior to current price action. So Balkrishna Industries is, like Tata Motors, ranked much lower and not going to be a part of our watch list. It is not to say that Balkrishna Industries is a bad company, and if someone has made a fundamental investment that they have made a mistake. I'm just suggesting my approach towards selecting the watch list that I eventually go on to trading. And obviously, I have a choice. So my choice is that I will take momentum, whereas I can understand if someone wants to select value. It just depends on how long you're in the market and why you're in the market. So Balkrishna Industries, of course, we can reject. Bharat Forge, obviously rejected. It's clearly tested the 30 period, which is weaker than the index. Bosch, obviously we know it's creating new highs. It's so it is selected. It always defended the 30 period. So we got that part right. Eicher Motor is also creating new highs, so it is also selected. So means here we can see the chart. So we can see Eicher Motors is actually even more decisively trending than Ashok Leyland, to be very frank, because Ashok Leyland has sort of created like a double top with a breach actually, but Eicher Motor is even has actually is looking like it's looking that it is going to close above it. So Eicher Motor obviously ranks 1 now, and we can see that amongst the qualified stocks Bajaj Auto is obviously the weakest. And when we are doing this practically, we'll be doing it with the pen, paper, etc., and making notes in our charts itself. The idea is to show how quick this can be done. Exide is rejected because of this test here. Next one is Hero MotoCo. It is also rejected because of this test here. We follow up with Mahindra and Maruti. Mahindra will obviously, it's as strong as Ashok Leyland, slightly stronger. So Mahindra will be kept, Eicher will be kept. Let's have a look at Maruti. Very strong. It's like Eicher. So Maruti will be kept. Balkrishna will be removed. Tata Motors will be removed. Hero Moto will be removed, etc. So we are seeing what is going to be kicked out of the portfolio and what is going to be kept into the portfolio. And obviously from a set of 12 stocks, we will come down to 5, 6, 7, a certain number of these stocks. And once we have a certain number of these stocks, that is when basically we get into shorter term time frames. That is, we start analyzing them on shorter time frames, either using specific price action features like patterns, gaps, etc., or using mechanical indicators like RSI, stochastic, etc., to time our entry in those time frames. But under no circumstances can a trader not know what is the structural trend of the stock that they are trading in. And the purpose of this video was to simply emphasize that point with certain real-time market examples. Just a small announcement. I will be on an Upsurge live in an hour from now. I'll more or less be covering a similar content, but in the event you have the bandwidth and the interest, I would be very happy to see you there. And if you have certain questions, I encourage you to actually type them there. Also, any feedback if you have, I would encourage you to type it here. I mean, if it's a negative feedback, I would prefer it on my channel than in Upsurge. So that will be at 5 p.m. So I just wanted to share that in case you see this video on or before that time. Obviously today the market closed lower, and we can discuss that. We will discuss that later, but we have discussed the structural points of the market, which I suggest that first you check that video, and then we will analyze that. So with that, I hope you have a great trading week ahead. I wish you and your family members a great Ganesh Chaturthi, and I'll see you soon. Thank you.